And good afternoon, everybody. This is Michael Filigera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the S&P 500 for Wednesday, June 16th, 2021. The market initially this morning was actually quite a bit on the boring side. We had a fairly decent opening and the market started actually at the top of the range and then just began to sell off. And that was fairly decent and could catch a nice move and make some money. But it was fits and starts, and it took a while for it to get someplace. But sometimes the whole hour was needed, but it did get to profitable levels and was tradable. Then the market kind of started to sell off, rallied a little bit, and then came back down to 42.25, 25.26, right in that level. And that continued to basically hold above 42.07, which was a break point. And if indeed that this count that I had up there before was going to suggest that what we were doing was just a small wave 4 correction, and maybe we needed to get down a little bit lower, I had discussed, and it did. And I thought, okay, that's perfect. And it kind of rallied a little bit off of that level, and I thought even better. Then we sat absolutely still waiting for the FOMC announcement. And when that came, the market proceeded to annihilate itself and drop. And that initial drop got us all the way down to 41.90. And so we were sitting about 4,200. And we got down to like 42.25. And then we dropped to 41.90. And then it rallied right back up to where we started. Got all the way back up to 42.27. So basically hit that hourly 200-day moving average, hit it on the chin once, and the chin went, nope, not budging. And it is sold back off. And now continues to move a little bit lower. So we're trying to make sense out of all of this. So what I have done is that I have, just to put some labeling on this chart, and let me go back down to my hourly, that I've moved wave 3 to this high. And before, I believe I had it here. And this was all garbagey corrective of 4, and this was all garbagey corrective of a 1 up and a 2 down, and this was going to be 3, and that should have been 4, and come back up and just start moving to new highs to finish it. Didn't happen. So in order to incorporate all of this junk, I just put it all into a wave 3, and it does fit. The junk part fits because we're in a finishing move, not necessarily within the third wave, but we're in a finishing move. Again, this rally has been going up since 2008. Well, actually, for us, I think in this market, maybe 2010, but quite a while. It's got 11, 12 years on it. And so that, when we're getting towards the end, it's going to be harder to push and push and push. And as we witnessed today, it doesn't take much to upset the apple cart and absolutely force people to come right in and go, nope, I'm out, get me out, boom. Or get me flat, or that maybe they were long too many deltas, to sell those deltas. So that's what I saw happening today. I'm basically a lot of people are going to interpret it as very severe news and whatever. I, on the other hand, decided that I think it's better to keep the rally, that finish of a very long-term advance on track. And how can I do that? I'm not changing the nature of the rally. I am extending it. But I've now put wave 3 up here, and I put a 4 here. And now I want to discuss what it's going to take for the market to really tell us from here, where are we going? Because the other side of this coin is that high was it. So 4,258.25 was it. That's it. That's as high as it gets for right now. That finishes primary wave 3, and now we're dropping into a primary 4th wave correction. And if that's the case, And what we're really tracing out right now is that initial, on an hourly chart, that initial 5-wave decline. And that's always what I look for. On an hourly chart, I look for that initial 5-wave decline. Or if we're finishing a corrective phase or declining phase, and I'm now looking for it to reverse, I'm always going to be looking on that hourly chart for the first 5 waves up. So if that's the case, wave 1, wave 2, wave 1 of 3, maybe. So let's talk about both possibilities. And to do that, I'm going to go down to the 15-minute chart because we can open it up and take a look at what's inside. Okay, so if indeed this is A, B, and this is C, and it completes a 4th wave, then what we're going to say that this is, and this actually tells us not, because on the NASDAQ, it's a little bit more plausible. On here, I'd have to make some exceptions because that's the low. And either that or it failed here. You know, we can always say that the 3 and then the 4. But if that's the case, let's just say that this is all going to balance out. Then this would be 1, and this could be wave 2. Now, the first thing that we put on is what parameters are going to contain wave 2. So we go back over here, and I put up my retracements. And I'm going to prefer to go here. I'll deal with that later. But right now, it's a little bit higher. Put it right there. So wave 2 has already reached 70.5% of wave 1. And it can go 100. It can go down to 41.90. And it just can't break it because then it's not a correction of wave 1, is it? If it's going below where it started. So that's, the market really kind of has to hold here or not break that and then start to rally and come back up through all of this and get itself back above 42.28 fairly quickly. Because remember, this would be 4 and this would be 1. That's 1, 2 of 3, and we're in the 3 of 3. That means it goes. It has to go. Okay. Let's take a look at the other side of that coin. And that is saying that this is it. That's the end. 42.58.25. We're not getting up any higher yet. So that's even over the midterm to what some people would call the long term. That's how long this high should stay in place. If that's the case, then what the market is forming is its initial 5 waves down based on the hourly chart. But now we're going to look at it here. 1, 2. Look at 1, 2 is protracted, but just bombed its way across, never just burned up time, did not burn up price. So it's a 2. Comes off in wave 1 of 3. Then it does wave 2 of 3. Okay. And if that's the case, let's take a peek at what wave 3 of 3 should look like. First thing we're going to do, oops. I'm going to put Fibonacci extensions because wave 3 will be related to wave 1. And the zones are going to be pretty severe. So the first thing that it would be, come on, go back the other way, thank you, is that wave 3 would be equal in length to wave 1 at 41.77. That's a 3 of 3. 3 of 3? Nah, not going to stop there. I'd expect a 3 of 3 to get down here. 41.45, 41.40. That's where I think it would come. at least down to 41.65, all in this area is where I think wave 3 of 3 can finish. Then we get a little fourth wave bounce, and then we get another fifth wave down, and that then would complete wave 3. And then we have a 4 and a 5 to complete the 5 wave sequence, that initial 5 wave sequence off of that high. That's the other side. Now, back out to the hourly. Both actually today, right now, carry equal weight in my mind. And I think that's important to bear. That if this is a 4, it has its marching orders. Now, could it drop itself down a little bit more and still be called a 4? Yes. We'd have to let it really come all the way down to 41.65 down in here. So it's got a little bit of room. In fact, if it's going to go up, it can come all the way back to 90 and then go. So a break below 90 brings us down into this zone. That's when that 100, yeah, I would probably look for 41.77 and maybe into here. Maybe. But that only puts it into the fourth wave of 1 lesser degree. And that's kind of a marking point on a chart. So downside, if it's indeed still has intentions to fly higher and make new highs now, then that's pretty much what the market has to do. It truly has to prove. But again, let me wrap around that. Stranger things have happened. I mean, the market is the market. And traders are going to do what traders are going to do. If someone gets a burr up their butt, then suddenly it's like, get out of the way. We are back. We are buying it. This market's going up, I promise. And their promise is realized because they're doing it. And they jump in and they start buying. That can happen. We have seen it. And all of these sequences and all of this noise ever since the initial decline off of the pandemic back in March of 2020, we have seen more reasons for the market to go down, and it doesn't, it'll start and then it stops and flies in the other direction. So we may see it again. Who knows? Be prepared. We have upside, we have downside. We've looked at both. We can see that this right now, a downside move would carry a lot more severity. If it starts to break down, it's going to be a lot more severe. If it starts to break up, yes, I expect it to gain some speed and go, but it might be due to thin market. And like today, it almost felt like sellers were just waiting and they were going to make the choice to buy or sell based on what that news was. So the sellers won. So tomorrow, we got our marching orders. We have the limitations on what these different moves can be. If it stops here, it holds here, and it turns, hallelujah, then we're probably going to start heading up, breaking above which we're thinking as support, should be some resistance moving back up, but eventually getting above 42.28 and heading back towards this high. So that's a lot, but stranger things. Downside, if it starts to break below 41.90, it could get pretty serious and drop it another 50 points. Bring it all the way down to 41.45 or even lower. So trade what's in front of you, use your moving averages. Moving averages will catch up with the move. And today, I'm not joking, today, when that thing kicked in, you can see these moving averages. That's the 200, that's the 50, that's the 20, it's the 48. And look at that, pointing down, pointing down, pointing down, pointing down, pointing down. And that's a 5-minute chart. So it hasn't switched gears yet. That says something. But we'll check again tomorrow when we come into trade. 15-minute, 200, 50, 20, 8, 4. Pointing down. Hasn't changed. Flat, which is pretty much what the market did. But when it got going, it's pointing down. Your 200 is the last to go because it's the heaviest. But it's now pointing down. They can change. Watch at the 30. And let's open it up so we can see them. Come on. You see on the 30, the 200 is still pretty flat, but it is starting ever so slightly to angle lower. If this thing kicks off and kicks down, that will join this one and this one and this one and this one. So they're aligned for downside, because the 200 sits on top, and then the 15, and the 20, and then the 8 and the 4. Now, the last one I'll check. Let's take a look at the hourly, and then I'm going to be done here for today. We've talked about what we can think here. It's getting there. In fact, if I was trading, I'd say that the hourly is aligned. I'll tell you why. The 50's turned lower, the 20's heading lower, and the other two are also following the market. And this one is, see, it's not so flat. It's edging, it's hinting lower. So if it continued, if it dropped another 30 or 40 points, those would drop below it, and then you're in alignment. And that would be on an hourly basis. So the intensity of the move is going to pick up. All right. I'm going to wish everybody a really good trading day tomorrow. Stay focused, stay alert. When these things get moving, folks, there really is plenty to make. Be a good day trader. Don't get married to any position. Pick your points. Use your moving averages. When the market has moved to a level that's costing you money, but it negates the reason you got into the position, then it's time to cover it. And if you don't, you're just building yourself into some doom. And it's not worth it. It's easier to recover off of $100, $150, $200 down than it is to recover off of 800, 900, 1,000. Because unless the market is just moving like a wildcat, if it goes from that into Sleetville, it's going to be horrible. You're going to grind your teeth because you're down that much money, and the market's not giving you the opportunity to make it back. And that can be very painful. So protect yourself. Trade smart. Next update will be Thursday, the 17th.